Morning, Rachels. For this morning, we are dealing with Mpumalanga pre-trial examination paper. I'm going to do the fixed asset note, the net profit after tax, where we are going to do some corrections on the net profit that was calculated before, but some figures were incorrect. So we're going to correct that, and we're also going to try and do the written income note and also probably complete the statement of financial position. Now, if you look at this, you'll realize that this information, this question, all of it is based on one information. So meaning that you'd have to use everything that is here to complete whatever that you are required to do. So now the best way that we can use to save time is to try and record information as soon as we have it. Okay, the first part, they're saying that calculate the amounts denoted by letter I to IV on the fixed asset note. The first letter, they want us to get our carrying value at the beginning of the year, and if you check here, we are given the addition at cost, and then we are also given the carrying value. But for land and buildings, what we know is that the cost price and the carrying value are the same, because land and buildings does not depreciate. So for us to get our opening carrying value, we are going to say take the 7,690,200 and subtract the 864,200. So we're going to say 7,920 7,600 7,690,200. So we're going to take that 7,690,200, and then would subtract the opening the addition at cost that they gave us, because that's the one that is going to help us to follow the bottom up approach. So that's what we would have to use to get what we want. So we'd say minus the addition at cost, which is according to here, the addition at cost is 864,200. So we'd say subtract 864,200. Okay, and then from there it is going to give us what we want. So 7,690,200 minus 864,200 will give us what we want, which is 6,826,000. Okay, then we would have figured the first answer. Now the second part, they're saying that we need to calculate the carrying value on vehicles on 28 February 2023. We just need to check what are we given, and also which methods of depreciation are they using. Roman figure number 2, remember, says that we need to get the carrying value, and if you check here, we don't have any disposal, which makes our work to be easy. But we do have the cost price at the end, and then we also do have the accumulated depreciation at the beginning of the year, and also the depreciation during the year, and nothing was disposed. They don't tell us anything about that. So we will take our cost price, which is 1,120,000, 1,120,000, and then would subtract the opening accumulated depreciation of 464,100. So take minus 464,100, and then would also have to subtract the depreciation during the year, which is 144,400. So would also have to subtract that 144,400, and then it will give us the carrying value that we want. So you need to make sure that your information is accurately recorded, so that your answers are not negatively affected. So we'd say we're going to say 1,120,000, and then we subtract 464,100, and then we also subtract 144,400, and then it is giving us 511,500. This is the carrying value that they want. Okay, and then from there, the next question, they want us to calculate the carrying value of the sold equipment. So maybe what we can do for us to be able to save time, as soon as we get the information that is necessary that we want, like for example here, we'll enter it here, but I don't think they'll want us to do the complete fixed asset part because some information is hidden. So next, they're saying that calculate the carrying value of the equipment. So we need to check our information about the equipment. Remember here, they're saying vehicles are depreciated at 15% on cost. And then they are also saying that equipment is depreciated at 20% per annum on the diminishing balance method. So meaning that they calculate that on the carrying value or book value. And during there, they are saying that they disposed some old facilities that were not in use. We're not really interested in that. They don't want that here. So we're not going to look at that. Next, they are saying that a new vehicle was purchased on 31 October 2022. This information is very important because it's going to help us to get what we want. If you look at the vehicles, they've given you only the cost price at the end of the year, and then you don't have the cost price for during the year for that edition that they are speaking about. Okay, but we can easily get the cost price, but we will do that when we calculate our depreciation. And then next, they are also telling you that equipment was sold on the 1st of January 2023, and then this is the information about that equipment. The cost price of that equipment was 90,000, and then the accumulated depreciation on the 1st of March was 22,000, and then the proceed on sale was 50,000. They're saying all relevant entries regarding the fixed assets were taken into account, meaning that all those other effects, they were recorded. But what they are interested in us showing, it is how to calculate the carrying value of that sold asset. Okay, so now because on equipment they said that it is calculated on diminishing balance method, we need to get our carrying value first, and then from there we'll start to calculate. Don't forget that our year starts on the 1st of March and ends on the 28th of February 2023. So what we need to do is to get the carrying value first, and you will get marks for calculating that carrying value. So we're going to say 90,000 minus 38,160. So we're going to say 90,000 here minus 38,160, and then it will give us the carrying value that we are going to calculate depreciation on. So 90,000 minus 38,160, it is giving us 51,840. Now we are going to use this 51,840 as our carrying value. So we are going to multiply by, according to here, the percentage is they told us that it's 20% per annum on diminishing balance method. So we'd say multiply by 20 over 100. So we'd have 20 over 100 here. Okay, and then next thing that we need to be cautious about is like, when was this asset sold? This information is going to help us. We need to check when was the asset sold. According to here, they said it was sold on this equipment that we are looking at was sold on the 1st of January. So meaning that it was with us from when we calculate, we would say it was with us from March 2022. So it would be March, April, May, June, July, August, September, October, November, December. We'll end only on December because this was sold on the first day of the month. So we will not count that month because it's only one day. So we'd have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We'd have 10 months. So when we come here, we are going to multiply that by 10 over 12. Okay, and then it will give us the depreciation for this year. So if we say 54,840 multiplied by 20 divided by 100, and then so it's 51,840 multiplied by 20 divided by 100, and then multiply by 10 divided by 12. It is giving us 8,640. So meaning that the depreciation for this year will be 8,640. So when we get the carrying value, we are going to say 90,000 minus the sum of 51,840 plus 8,640. So we're going to say 90,000 minus the sum of the two. I'll just add them together, or you can choose to show them separately and say minus 51,840 and also subtract 8,640, and then you will get the final carrying value that you want. So 90,000 minus 51,840 and also minus 8,640. It is give let's check something. not 51,840. Remember, we're supposed to subtract, not like this, sorry. We're supposed to subtract, remember, this 51,840 is the carrying value, so we can just say 51,840 minus the current depreciation. I think that's the easiest way we can go about it. Okay, so I'm going to do it like that. Remember, the more an asset depreciates, the more it loses value. So the carrying value will just be, we can just take the carrying value that we had at the beginning of the year, which is 51,840, and then we say subtract 8,640, and then it will give us that carrying value that we want. This is the easiest way you can get it. So 51,840 minus 8,640, it is giving us 43,200. So we have that 43,200 here as our carrying value. And then next, they're saying that calculate the total depreciation on equipment. So what we know is that when we do our depreciation, we need to calculate for three things: old, sold, and new. And if you look at this, they don't tell us anything about any addition, so any addition at cost, so meaning that we are only focusing on the sold and the new one. Okay, I mean, sorry, on the sold and the old ones, because the addition at cost is not available. So this is what we are going to work on. So we already have depreciation for the sold items, so we can just write that depreciation for the sold is there, we got it. So for the sold is going to be 8,640, and then for the old, we need to check to do this, take our cost price and minus 90,000. So our cost price, according to here, it's the old cost price, we don't have it, we have to look for it, but we know that if we say this plus this, it will give us what was this, because we're just doing a reversal of what they've done, right? So if we say, remember, carrying value is equals to cost price minus accumulated, so which means cost price is equals to the sum of the two. So let's see, 302,560, and then we add back our carrying value will be 317,440. It is giving us 620. So which means that here our cost price at the beginning was 620,000 here, and then you got the cost price. So what we'll do, we'll take the cost price and less that 90,000, so that we can be left with equipment that is old. So we are going to say 620,000 minus 90,000, so that it can give us the old equipment. So let's see how much we are getting. So this answer minus 90,000 is going to give us 530,000. So which means that we are going to have the old cost price as 530,000. And we also need to do the same to accumulated dep. Remember, we need to get the old accumulated depreciation also. So it's going to be according to the information, it's going to be 302,560 minus, so I'll just do it here. So it's going to be 302,560 minus the 38,160, 38,160, and let's see how much we are going to get. So 302,560 minus 38,160, it is giving us 264,400. So the other accumulated depreciation is equals to 264,400. Now we need to get the carrying value. So our carrying value in this case will be the difference between the two, 530 minus 200. So the carrying value will be 580,000. Then we subtract the 264,400, and then our carrying value will be what we will get here. So remember, 530,000 subtract 264,400, it gave us 265,600. So we'd have 265,600. Now this is the carrying value that we have, but we need to get the actual depreciation. So maybe we can just do it straight away. So we'll take this and then multiply it by 20% and then multiply it by 12 over 12. So we're going to say this multiply by 20 over 100 and then multiply by 12 over 12. It will give us the depreciation of the old equipment. So if we say this multiply by 0.20 or 20 over 100, it is giving us 53,120. So our total depreciation for the year will be 53,120 plus that 8,640. So which will give us 61,760, and then you are done with this question, with this part of the question. Let me just check if there are any other things that they want us to do. So then you'll be done with the fixed asset node, and then this will give you around 17 marks, which is a lot for the exam. And then next we are going to deal with the incorrect net profit. Okay. So in terms of the incorrect net profit, you need to read adjustments and follow that summary notes that I made for you in the previous lesson. You can check it somewhere there in the videos. I'll try to put it also in the comment section because it has got the principles that I was saying that learners should apply when they do this. So let's go back to that incorrect net profit. So we are done with this part. Okay. Next, they are saying that we need to complete to do the corrections. Okay. Now, when this is like this, I'm going to try and give you the best way that you can go about it. Normally, I advise learners to say, when you're given something like this, start with what you have. So our trading stock, according to this, is 726,040. So we are going to go to our notes in the balance sheet also. We are going to try and complete this thing in the same time. Remember here, you're going to have cash and cash. So I'll just write cash and cash. And then next, you're going to have here under the ordinary share capital, you're going to have your retained income, and then you're going to prepare a note for that. And then under non-current liabilities here, you're going to have your loan. Okay. And then here you're going to have trade and other payables. You're going to have your shareholders for dividends. And then you're going to have your current portion if it's given, or if they tell you how should you get it. And then sometimes you can have bank overdraft or SARS income tax. So in terms of this one, we will be controlled by the information. Okay, so we'll try and work that one out. And then here you're going to have balance on the 1st of March, and then you'd have net profit after tax. Net profit after tax, which is what you're going to take from here. And then you are going to have your repurchase of shares, and then you are going to have your declared dividends. Okay, so you need to have an idea in terms of what you are supposed to do. So now let's go to the question quickly and hear what they're saying. So the first question says that remember, we've entered our trading stock. Like I said, before we go to that, we can continue to enter the information. So the trading stock of 726.40, we have already captured it in the balance sheet. Okay, we have not. So we'd say 726,040, and then we move on to the next one. Next one we have we are given net trade debtors, and then our net trade debtors is 546,330. So we'd also have it here, 536,330. Would have it here, 536,330. And then next we check what else are we given. We are also given 546,330. Let me just confirm. Oh, sorry, it's 4 here. So it's 546,330. Okay, pardon me for that. Now we will also check what else are we having. Now this, remember, when you do it like this, it will help you to save time, especially if the question uses the same information. And then next you have your creditors control. Creditors control is part of trade and other payables. So this 388,790 will come here. So you have that creditors control as 388,790. So we have that 388,790 here, 388,790. And then next we have our provisional tax payment as 340,000. This means that this is the tax that we have actually paid, but we are not sure whether do we have to pay more or less. The additional information will tell us on that. And then next we have consumable stores. Now this consumables cash and cash equivalent here, they're saying it's a question mark, so it will be a balancing figure. So just to remind ourselves here, we can put a question mark, just we don't forget to see that we will use it to balance. Okay. And then next, they are saying that consumable stores of 117,600 will use the information. These are some of the expenses. And then you are also given the ordinary share dividends. This is the paid one, the interim, which is supposed to be entered in the retained income. And if you look at this, you will see that it has already been captured for you. And then next, when we continue, we would then have some information that we need for the incorrect net profit, but we must try and remember that some of these things will affect the balance sheet as well as the incorrect net profit. Okay, so next they're saying that the bookkeeper calculated the net profit before tax as 1,243,000. However, he did not take into account only the following adjustments. So meaning that these adjustments that are here, they were not considered, so we need to consider them. The first one says that unused consumable stores on 28 February 2023 was 12,440. Once we have unused, remember that in the income statement they deducted the entire 100%, so which means that it made our net profit to go down because that was treated as an expense. So we will have to take this unused consumable stores and increase our net profit, because last time we were doing it, we deducted the entire thing. So we'll need to add this to our net profit so that it can go up and be up to date. So we'd say in the answer sheet, consumable stores, it will be plus 12,440. So I will have it here, consumable stores, so it will be plus 12,440. But we must also remember that this affect our trading stock because the information is not recorded in the balance sheet. So you also need to go to your balance sheet and then also record that plus 12,440. So recording simultaneously will help you to save time. Then next we can go to the next adjustment. They are saying that toys with a selling price of 15,050 was donated to children's home. Then markup is 75% on cost. Remember, when we do donations with and drawings, they are done at the cost price, so we need to get our cost price. So we're going to say 15,050 multiplied by 100 divided by 175, and then it will give us 8,600. This 8,600 is our cost price. So what we must do is that we must remember that donations is regarded as an expense, but this person is donating fiscal stock, so we must reduce our stock also in the balance sheet. So we're going to reduce our net profit. So we'd say donations here, donations, and then we'd have that 8,600 in brackets because the person is donating items. And also here we must reduce our trading stock because he is donating fiscal trading stock, so we must subtract 8,600 also here. And then the next adjustment says that only 90% of the audit fees was paid. So in other words, the remaining 10% was not paid, and they're saying that the balance will be paid in the next year. So it means that this expense is accrued. So what we'll do, we'll take our audit fees, we'll say audit fees of 88,740 here. I'll write it like that, in the incorrect net profit. So we'll say audit fees, and then we'll say 88, I think it's 88,740. So we'd say 88,740, 88,740 multiplied by 10 over 90. Okay, not over 100, over 90. Remember, this is an expense that must still be paid, so it will reduce our net profit, and we are also owing the auditors. So if we say 88,740 multiply by 10 divided by 90, it will tell us how much. The amount is 9,860. That's 9,860 will have to be also to be added to trade and other payables in the balance sheet, because we are owing these people, we have not paid them. So under trade and other payables would say plus, I think it's 9,860. Okay, then we move on to the next question. Next, they're saying that the rent income for January and February were not received, and then the tenant occupies the premises from 1 May. So this person has stayed with us from the 1st of May, but they are owing us rent for 2 months. So this tells us that automatically tells us that our rent income must increase the net profit, and then we must also record this under trade and other receivables. So if this person has stayed with us from May up until December, we need to check how many months. So it's going to be May, June, July, August, September, October, November, December. So if you look at this, it is 1, 2, 3, 4, 5, 6, 7, 8. So which means that we have received the rent for 8 months. We are only left with the rent for 2 months. So we'd say in the recording would say rent income under the incorrect net profit. Remember, it must increase it. So we'd say rent income, and then we'd say 109,600 multiplied by 2 over 8. So if we say 109,600 multiplied by 2 divided by 8, it is going to give us 27,400. So meaning that our net profit must go down by 27,400. And then this income, because we have not received it, it is also receivable in the balance sheet. So we'd say under receivables, we'd say plus 27,000, let me put it here, plus 27,400. Okay, and then we have recorded twice, so we have applied double entry also. And then next, they are saying that, so we also need to look at the part of they're saying that the next transaction says that insurance included premiums up until 31st March 2023. So it is already telling us that we have a prepaid expense, right? And they're saying note that the premiums increased by 5% from 1 May. So which means that from December, from March to December, it was always 100%. So we need to check how many months. Okay, so if we move from March to December, it's going to tell us what we should do. Okay, so from March, April, May, June, July, August, September, October, November, December. So let's check how many months. 1, 2, 3, 4, 5. Let's check first when also does that insurance increase. They're saying that it is increasing on the 1st of November. So meaning that we will only receive 100% from the 1st of March up until the month before November, which is October. So let me do it here. So I'll cancel this out. So this is cancelled. Okay, so it will be 1, 2, 3, 4, 5, 6, 7, 8. It will be 8 months where it was 100%, and it will give us 800. And then for the remaining that insurance for the number of extra months that we've paid. Remember, at the end of the day, it has to show that we paid 1 month in advance. So from November, from here, no, November, December, January, February, March, it will be 5 months. So we'd have to say 105 times 8. Then it will give us the amount that we want. So 105 multiplied by 8. 105 multiplied by 8, it is giving us 840. Let me check the increase. Okay, so let's see. So remember, from November, December, January, February, March, it became 105% according to this. So that amount that we got here, this 840, so let's check something. If we say that's not supposed to, this is supposed to be times 5, 105 times 5, not 8. So 105 times 5, it is 525. Okay, so remember, when we add the two, it's supposed to be 8 months plus 5 months will give us 13 months. Okay, so 800 plus 525 will give us what we want. 800 plus 525, it is giving us 1325. So remember, here I changed it to 8225. It's not 8. So we want only 105% of that. So we'll need to check how much is the insurance. The insurance, according to here, is 45,050. So we are going to say for insurance, we're going to say 45,050 multiplied by 105 over 1325. Remember, this was overpaid, so we need to add it back. So 45,050 multiplied by 105 divided by 1325, it is giving us 3,570. We'll need to add back that 3,570, and this should also be added to our trade and other receivables in the balance sheet. So we'd also say under trade and other receivables, would say also plus 3,570. Okay, and then next we have some information that can also be useful to us. So now, next, they're telling us that the income tax for the year after taking into account all the adjustment was 380,350. So this is our income tax that we were actually supposed to pay. So the income tax, remember, here we'd have net profit before tax. The income tax will come here, 380,350. It will come here. So let's check also how this will have an impact. Remember, we are going to compare with the payment that we made. We paid 340,000 according to the information, and we were supposed to only pay 380,350. So which means that we are actually owing SARS. So our SARS income tax will come here, SARS income tax, and then it will be 380,350 minus 340,000. So 380,350 minus 340,000 will give us 40,350. Then you'll also get your marks here. Okay, then you are done with this. So now from there we can proceed with our information. They are saying to us that we need to get the net profit before tax first. So let's see, 1,243,000 plus minus 8,600 minus 9860 plus 27,400 and then plus 3570. Let me see something here. We did not add back the 12,440, so we'd have to add it plus 12,440. So it is giving us 1,267,950. If we take this and then we subtract, we take this and then we subtract 380,350, it's going to give us 887,600. So this 887,600 will come here. Okay, and then we will automatically take it to our return income here, 887,600, and you'll get a mark for transferring it. Then we'll need to look for the next set of information that we must also get. So remember here we got it. Next, they're telling us that information about the share capital. Now they're saying that there were 920,000 shares on the 1st of March. This is where we are. We are in March, so this will be our timeline here. Maybe let me change the layout. So this is where we are. We are in March. This is March, so it's going to be March, April, May. Yeah, I'll write it here. So this is March, April, May, June, July, August, September, October, November, December, January, February. At the beginning of the year, we have 920,000 shares. That's what they're telling us. And then next, they are saying that on the 31st of May 2020, additional shares were issued. So in May, on the 30th of May, they issued additional shares. So here, in May, it will be plus, I think it is 130,000. So let's check if I'm right. So it's a plus 130,000. So which means we now have the number of shares that are issued is 920,000 plus 130,000. So we have 1,050,000 shares at the moment, okay, issued up in May. So it is 1,050,000 shares. Then we continue with the information. Next, they're telling us that an interim on the 31st of August, they paid an interim dividend. That one is not a problem because they gave us the information, right? So we are good with that one. Now, after they're telling us that 70,000 shares were repurchased on the 1st of December, 70,000 shares were repurchased. So meaning that they subtracted 70,000 on the 1st of December. So in December here, it's supposed to be minus 70,000. So remember, we have 1,050,000 at the moment. If we subtract 70,000, it will tell us how much we have, and then it means here that we had 980,000 shares in December, okay, issued. Next, they are telling us that an EFT for 679,000 was paid to an estate to the estate was paid to the estate of the shareholder. They do not qualify for dividends, and if you look at this, they just told you the final amount that they paid. You don't know what was the what is the extra income that they need to borrow from that they need to borrow from how do you put it, that they need to borrow from the retained income. So what we'll do, we'll just have to get our average price. And remember, some information is omitted at the beginning, but we have the total of the ordinary shareholders equity at the end of the year. And according to the information that they gave us, shareholders equity at the end of the year is 8,330,000. So to get the average price, we'll say 8,330,000, and then we divide it by 980,000 of the shares that were remaining at the end of the year. And then it told us that it will tell us that the price is, average price is 8.50. So our average price is 8.50. So we know that the average price is close to 8.50. So what we want is just the difference between the what we were supposed to pay and what we actually paid. So if we say 70,000 multiplied by 8.50, it will give us 595,000. So we were supposed to pay 595,000 for those shares, but we actually paid 679. So if we say 595,000 and then minus 679,000, it will give us the money that we need to borrow from the retained income, which is 84,000. So you need to show that calculation. Okay, so remember I said to get that 84,000, I showed it. So now you need to show it on your answer book. I'll just show that I said remember that process of getting the average price. So remember when we're doing calculations, I said 595,000. Is it 95? Let me check here. Yes, 595,000 minus 679,000, and then it gave us this 84,000, and that's what they are interested in. That's what you need to get. Okay, and then next they are telling us that a final dividend was declared at the end of the year. So we are going to take 980,000 and make those dividends. So we'd say 980,000. I get the number of shares that are available at the end of the year is 980. So those shares that were sold, according to the information, they do not qualify for the dividends. Here they told you that they do not qualify, so which means you should not include them when you declare your dividends. So 980,000 multiplied by 30 cents, it is giving us 294,000. So this 294,000, it is our declared shares. So we are going to take it also to shareholders for dividends here as 294,000, and then we'll proceed with our information. Next, you realize that we have to close off the retained income note. So our retained income, according to this, when we close it off here, we'll have to add the sum of all dividends. So this one plus 241,500 plus 294,000, it is giving us 535,500. So we'd have 535,500 here. Then it will give us the balance of the retained income. So let's see, 246,900 plus 887,600, and then we subtract 84,000, and then we also subtract 535,500. We're getting 515,000. So meaning that our retained income at the end of the year will be 515,000, which is the same that we have to transfer to here, retained income 515,000, and then from there you add it to your shareholders equity, to your ordinary share capital, so that it can give you shareholders equity. So it gave us 8,845,000, and then you are done with the equity part. And then next you would have to check other adjustments and see what they are saying to you. Next, they're saying that the balance of the loan on the first was 1,075,200. Fixed installments, according to this, they amounted to 22,400 per month, and they're saying that they were paid and recorded. So we'd say 22,400 multiplied by 12, it will give us that amount, which is 688 268,800. So it will be 268,800 here. And then next, they're saying that the loan statement reflected an interest capitalized of 123,600 for the year ended 28 February, and this was duly recorded. And they're saying that a part of the loan balance will be repaid in the next financial year. Okay, so they're telling you that they are not specific about the amount that they have to pay. But if you look at this, you will see that once you are done with everything, your current portion is the only thing that is missing, and you have the total of the current account, I mean of the current liabilities here. So meaning that you can actually use this to get the balance of the current portion. But I feel like they should have been more specific so that they don't confuse learners. But we have to use what we use. So remember, our opening balance is 1,075,200. So we'd have that 1,075,200, and then we would have to subtract the repayments of 268,800, and then we'd have to add back the interest. Our interest, according to this, is 123,600. So we'd have to add back 123,600, and then would say we would have to subtract the current portion, but at the moment we don't know it. We just have to close this off because there are no other transactions. So if we say 388,790, then we add our 9,860, it will give us the total of 398,650, and then from there you see that our missing figure will be the current portion. So let's see, 872,500 minus 398,650 minus 294,000, and then also minus 40,350. It is giving us 139,500. So let's see, 872,500 minus 398,650, and then minus 294,000, as well as subtract 40,350. It indeed gave us 139,500. So that balancing figure here will be 139,500. Then we are good to go. So here, which means that we need to subtract 139,500 as our current portion. Then we have the final amount. So let's see, 1,075,200 minus 268,800 plus 123,600, and then minus 139,500. It is giving us 790,500. So we have 790,500 here as our loan. Then you are done with this part. Then from there, if you see, we have the sum of our equity and liabilities. So we have to apply accounting equation. So 8,845,000 plus 790,500, and then also plus 872,500 will give us 1,050,000. 10,508,000. So we'd have that 10,508,000 here, and then we will also have to transfer it to our total assets, 10,508,000 here, and then from there we'd have to check what else is missing here. If you see, you look at this, we don't have cash and cash equivalents is a question mark, but we will use some information to get what we want. So for now, let's close off what is given to us. So in terms of our inventory, we have 726,040 plus 12,440 and then minus 8,600. It is giving us 72988. So we'd have that 72988 here. And then from there, we'd have to also close our trade and other receivables. So if we say 546,330 plus 27,400, and then we also add 3,570, it will give us 577,300. So our balancing missing figure is the cash and cash equivalent. So on the information, they like giving you ratios that you can use. So here they are saying that after all adjustments, the current ratio was correctly calculated as 1.8:1. Remember the formula says we're saying that current assets is to current liabilities. We know that our current liabilities at the moment is 872,500, but this is not known. Our current assets are not known, and we know that the answer is 1.8:1. So which means it tells me that to get my current assets, I must cross multiply here by 1.8. So which means for us to get our current assets, we are going to say 872,500 multiplied by 1.8. It will give us the total of our current assets. So 872,500 multiplied by 1.8, it is giving us 1,570,500. So if we take it and subtract 729,880, and we also subtract 577,300, it will give us 263,320. So we have that 263,320 as our cash and cash equivalent. And then from there, if we take our total assets is 10,508,000, and then we subtract 1,570,500. It will give us our total non-current assets, which is 8,937,000. According to here, the answer is 500. So if we take this and then subtract 8,414,180, it will give us 523,320, and then that will be our fixed assets. And then from there, you'll be done answering the entire 60 marks. Thank you for watching.